Good morning and thanks so much for tuning into the Trade Setup with me, Niraj. Shah. I'm back from the World Economic Forum. And did you know that $30 billion is the quantum of redemptions made from climate-focused mutual funds last year, ending 4 years of increases? This is what the world came to, betting on green energy, putting money behind that and then saying, hey, let's bet behind returns. But be that as it may, yesterday was a different day for the world markets as well. A bit of an uptick for the Nasdaq and Nvidia, by the way. The futures are very, very flat, but a bit of a relief, really, if you will. Asia, whichever is on, might be showing that too. And our markets, which had a bit of an uptick yesterday, though it got cooled off a little bit, still showing some bit of an upside, which is actually not a bad sign at all. So what's the trade setup therefore for the day looking like? I would say that banks remain the best place to ride the bounce back, but any bounce back that you are trying to trade, it's better to trade with stick stop losses. The good part though, and this is borrowed from a Jeffries note, is that if you look at some statistics, one of the statistics, the bond equity yield gap indicator is now at long-term average levels, which actually helps. I mean, forget this, but I'm just saying that there's a difference between, there's a bond equity yield gap indicator, which is now at long-term average levels, which is a great sign. ITC hotels listing today, expected to be 180, 250 a share. I would reckon that if it lists at these higher levels, they'll be selling, that will come in and the stock will come off lower. So if you're a shareholder, watch out for an uptick, and if there is an uptick, get sold into. Let's move on to stocks very quickly. It's a long list. I'll rush through all of that. Bajaj Auto, firstly, the numbers largely in line with estimates, you would reckon. Some brokerages like the commentary that they've given or whatever little commentary that they could make out of it. But I think the numbers are largely in line, so no big reactions anticipated. But there are some very strong movers, very strong numbers. Suson, excellent set of numbers that Suson has come out with. Revenue up 91%, PAT up 90%, margins expand. The con call commentary was very strong. They've spoken about O&M revenue being very strong in the years to come. I would reckon the stock will get a thumbs up. A 90 rupee stock at 50 currently. Yes, not cheap even now, but very strong performance. So good numbers by that. Then BHEL, the numbers looked okay. Revenue uptake, margin uptake, PAT uptake. The problem is that the valuations that it is trading at, the 9-month numbers for now for BHEL, the PAT is about 30 crores. The market cap is 65,000 crores. It's very expensive. So bear that in mind. The order book is good, which is actually a positive sign. Simma SGS, the numbers look very good. The management will be speaking to us at 9 a.m. by the way. Revenue is up 23%, margins expand, PAT expands a little bit. So this one is done okay too for itself. Let's breeze through some of the others if we can, instead of showing every number. IFB Industries, revenues up, margins expand, PAT higher. So very good going for IFB Industries as well. And the next one is PDS, wherein revenues are up 21% and margins expanded as well. So that looked okay too. So keep this at the back of your mind. Lastly, the blowout numbers were AMI Organics, the stock of the day to my mind. Revenues up 65%, margins expand 1,000 basis points nearly, and the profit after tax multiple of what it was. I think this will be the stock of the day today. CDMO performance doing very well. What else? From stocks that didn't do well, just a couple of them. Actually, GMR Airports did well. So lastly, that one, revenues up 19%, margins expand and PAT expand. So watch out for this. Now, I just want to highlight two more stocks before we wrap up. One of them is VIP. Abysmal set of numbers, and the stock will show a bit of a corrective move. Revenues were weak, margins collapsed, there was a net loss, and now they clocked in a net loss in 3 of the last 4 quarters. So that's a bit weak. And JSW Energy, a bit of a chink in the armor, though Jeffries says that this is a temporary weakness and the execution should be bought into, so keep in mind. And lastly, Keynes Technologies, there's a Jeffries note on the biggest loser of the day yesterday. They are coming out and saying that they have upgraded the stock to a buy post the sharp correction. So keep an eye out for this one as well. Thanks so much, viewers, for tuning in today.